Hello friends, welcome to the next video. Here we have the audit and assurance complete revision in short time, right? So we have our exams in March, many professional examinations such as the CA, CMA, CPA, maybe ACCA, all have this common topic, that is audit and assurance. You know, topic audit and assurance generally divides in three main phases. One is the planning part, then the performance, and lastly the completion part. So let's start with the planning part. In planning, auditor devoted his much time and attention towards the important areas of audit, and he tries to identify and resolve potential problems on a timely basis, right? Also, he assists in the selection of engagement team members with appropriate levels of capabilities and competence. In the planning stage, he generally covers these things, and the relevant standard for this part is the 300, that is audit planning, right? Next, after planning or during the planning, he considers the audit strategy. In strategy, he sets the scope, timing, and the direction of audit and guides the development of the more detailed audit plan, right? Next, we have the audit plan. Once the overall strategy has been planned, detailed consideration can be given to each individual audit objective and try to think about how it can be best met. Alright, next is the understanding the client. You know, the most important area of audit is the understanding the client. How we deal with our client. I mean, we need to understand his business, how the company works, the control environment, the detailed internal controls, try to identify and assess the risks of material misstatements in the financial statements, determine to the extent which auditor would rely on the internal control system, also to understand the relevant laws and regulations impacting the entity, right? Further, to consider the reliability of various evidence sources. The relevant standard for this understanding the client is the ISA 315, understanding the entity and its environment and assessing the risk of material misstatement. Alright, next we have the understanding gained from, like how we will gain our understanding regarding our client. First, from the industry or maybe through the regulatory, prior year financial statements, nature of entity and accounting policies, discussions with the previous auditors or maybe access to their file, prior year report to management, review of board minutes, current year budgets and management accounts, or maybe through the client website. Next, we have assessing engagement risks at the planning stage. You know, the auditor generally ensure that his attention is most focused early on the areas most likely to cause material misstatement. Means he will make sure that his full attention on the material misstatements which may be the most likely arise in the financial statements. Further, the unusual balances or the transactions so that it can be dealt early and in a timely manner. Next, he will select the most appropriate team with more experienced staff allocated to higher risk audits. Further, he will understand the risk of fraud, money laundering, and the matters related to the going concern, right? Next, we have the audit risk. Audit risk means auditor expresses an inappropriate audit opinion when the financial statements are materially misstated due to inherent risk and control risk. There are risks inherent in the business organizations and may be related to the control, and that risk may lead to the inappropriate audit opinion, and that is known as our audit risk. So inherent risk is financial statements contain material misstatement before consideration of any related controls. Means if we don't have any controls in the organization, and then the financial statements would be materially misstated, and that would be known as there is a inherent risk in the financial statements, right? Next is the control risk. The internal control fails to prevent or detect material misstatements in the financial statement. The internal control has no capacity or may be not efficient to prevent or may detect that material misstatements, right? And that would arise to the control risk. Next, we have the detection risk. Detection risk generally comes towards the auditor side because he may not able to detect the material misstatement that exists in the financial statements. Next is the analytical procedures at planning stage. It will help to assist the auditor in planning the nature, timing, and extent of other audit procedures. Further, it will add to the firm's understanding of the business and identify risk areas to which audit resources should be targeted. Alright, next we have understand internal controls. First, the operations of the entity are conducted efficiently. Then, the entity has complied with all the relevant rules and regulations, enabling planning of the audit, identify the types of potential misstatements. Next, we consider the factors that affect the risk of misstatement. And lastly, we will design effective substantive test. Okay, let's start with phase 2. Phase 2 is the performance of audit, and we will perform our audit. In performance, we generally see the transactions related to the sales, purchases, payrolls, account balances like assets, liabilities, equity. There are assertions about classes of transactions, like what you will audit in the transactions. First, you will see the occurrence, like the transaction and events that have been recorded or disclosed have been occurred or not. You will see the completeness, that all the transactions have been recorded that should have been recorded. Next is the accuracy. The transactions and events are recorded appropriately. Cutoff means the transaction and events have been recorded in the correct accounting period, and the classification, that they are in their proper accounts, right? These are some assertions which you will need to check during your audit of transactions, like occurrence, completeness, accuracy, cutoff, classification. These are the general things which we consider during transactions, right? Next, we have the account balances. We first see the existence, like the all assets or maybe the liabilities or equity interest actually exist or not. We will try to find out their rights, obligations, the entity which holds or controls related to the liabilities or the assets. Also, we will check the completeness of these assets and liabilities, the accuracy related to the valuation or allocations in the financial statements at appropriate amounts. Lastly, the classification which we will consider that they are in their proper accounts or not, right? There are several procedures, audit procedures which we need to follow to obtain the audit evidence. First, we will inspect the documents, examine the records, then we will observe it, the process or procedures being performed by others. We may do analytical procedures like the evaluations of financial information, fluctuations, or relationships that are inconsistent. We may perform the previous year comparison, like we can compare our figures like they are upwards or downwards, how much percentage change from the past year numbers. Also, we may do inquiry by seeking information of knowledgeable persons, right? Next, we can also do external confirmation, means that we can confirm from the third party by writing them. We can perform recalculation, checking the mathematical accuracy, or may reperform, which involves the auditor independent execution of procedure or controls that were originally performed as part of the entity's internal control, right? These are the some audit procedures we can find for our audit evidence, right? You know, in audit, we need the audit evidence, and that evidence should be sufficient and appropriate, right? Sufficient means the quantity of evidence, that it should have some quantity, and the quality of evidence. Further, we may approach towards substantive procedures, means the procedures which are designed to detect material misstatements at the assertion level. We can try to do more detailed work, more corroborative evidences related to the misstatements, right? In substantive procedures, we can follow the analytical procedures, the analysis of significant ratios and trends, as we discussed. Ratios may be like gross profit margin, operating profit, maybe the return on capital employed, right? Further, we can do test of details, means the classes of transactions, account balances, or related disclosures part, right? Further, if we need to do audit of revenue, so we will first consider the arithmetical accuracy of invoices, like they are correctly invoiced, or we may check the discount part, we may recalculate it and ensure the accuracy. We may compare overall revenue against prior years, or may check the budgets and investigate any significant fluctuations, right? For a sample of invoices, we can match rates to standard price list to confirm accuracy. If the credit notes raised, we can trace the original invoice and ensure invoice correctly removed from the sales. Further, the completeness, like we will check particular customer orders, how they are placed, how the goods are dispatched, and these invoices or dispatch notes are included in the sales ledger to ensure completeness of revenue, right? We can also check the cutoff procedures, like how the goods dispatch notes are dealt. Take a sample of GDNs immediately before and after the year end to ensure they are correctly recorded in the correct accounting period. Alright, further we are having the PPE. PPE is one of the main area of audit: property, plant and equipment. The general things like completeness, existence, rights and obligations, inquire with the management, discuss the depreciation method, it is reasonable. We can take the written representation as well, how the depreciation has been calculated. We can consider the revaluations part and related depreciation on it, additions, disposals, all these things we need to consider during the audit of PPE, right? Next we have the audit of intangible assets. See, we need to consider the opening balance. This is the main or maybe the common area which we consider for each and every aspect or assets or liability. Like we consider the opening balances and then compare with the current year numbers, and further we agree with these numbers. Okay, agree the closing balances to the journal ledger, trial balance and draft financial statements. Recalculate the amortization charge for a sample of intangible assets. Confirm it is in line with the policy, right? Next we have the audit of payroll. Payroll is an expense, right? And we should compare with the prior year numbers and investigate any differences. We should review monthly payroll charges, right? Compare with the budgets, discuss with the management any significant differences. And what we can do, we can take a sample of payroll records to confirm completeness and accuracy of payroll expense. We can recalculate the gross or net pay. Further, we can check our bank transfers, that how the total net pay proceeds, whether the balances are agree with the cash book and the bank transfers. We should check the year-end income tax payable related to the payroll, right? Moving to the audit of long-term borrowings. Again, the opening balance, as mentioned, we will see for most of the balances, like the opening balances is correct, maybe uh, some differences, we should investigate it and discuss with the management. Any loan payments made during the year, agree with the cash flows, bank statements, bank confirmation letter, details of loans, overdrafts. Alright, we can review board minutes for evidence of new loans, if any, taken out throughout the year. Ensure they are properly recorded, and we can inspect the bank statements for the year for evidence of significant deposits, right? Next, having audit of clients use of SO, service organizations, right? The audit team should gain an understanding of the services being performed by the service organization. Means the team should understand what type of services are provided by the service organization, and we should consider the materiality and the basis of outsourcing contract. We need to assess the design and implementation of internal controls at the service organization. See, this is the main area, like we are using the services of one organization, right? We should ensure uh, one company is using the services, right? And we should ensure that the company which is providing services to us, and that should have proper internal controls, and as an auditor he must undertake the test of controls to confirm the operating effectiveness of the controls, right? Auditors should contact the service organization auditors to request either a type 1 report or type 2 report. So type 1 report only describe about the description and design of controls. On the other hand, type 2 report suggests the description, design and operating effectiveness of controls, right? And the auditor is responsible for obtaining sufficient and appropriate audit evidence, right? Now we are moving towards going concern. So going concern means that the entity seems to be in going concern, and the auditor should evaluate the management's assumption on which the assessment is based. Management plans for future action, right? Auditor should consider all the facts and identify any current or potential cash flow difficulties, review post-year end management accounts, review cash flow forecast, confirm existing terms and adequacy of borrowing facilities, right? So lastly, we have the phase 3 and it is the completion stage. Guys, we studied first the planning stage, then performing. Now we are on the completion part. In planning we did our best plan that how we will perform it, and we performed with our audit procedures, different techniques, how we approached all the audit. Now we are in the completion stage. Let's see what we have in this. Next is the form of opinion. There are two main opinions. One is modified and another is unmodified. When the financial statements are providing true and fair view, then we issued or we provide our unmodified opinion, right? In modified opinion, there can be qualified, adverse or disclaimer. So if we found any audit evidence which is not true, or maybe significance material misstatement, then we can issue qualified report. On the other hand, if the issues are pervasive and they are more significant, then we can issue the adverse opinion. While the disclaimer opinion can be issued when we are unable to obtain sufficient appropriate audit evidence, or maybe due to the limitation on the scope of audit, right, which may arise from circumstances beyond the entity's control. For example, accounting records may be destroyed, or it may be related to the nature or timing of the auditor's work, which may prevent the observation of physical inventory count or any other limitations imposed by the management, right? If there is a qualified opinion, the wordings in the report would be, in our opinion, except for the effects of the matter described in the basis of qualified opinion paragraph, the financial statements presents fairly, right? In adverse opinion, we can mention this: because of the significance of the matter discussed in the basis of adverse opinion paragraph, the consolidated financial statements do not present fairly, or do not give a true and fair view of the financial position, right? If we have the next disclaimer of opinion, because of the significance of the matters described in the basis for disclaimer of opinion paragraph, we have not been able to obtain sufficient appropriate audit evidence to provide a basis for an audit opinion. Accordingly, we do not express an opinion on the financial statements. Next, we have the key audit matters. Means, as per the ISA 701, it is mentioned that if there are any key audit matters, we need to mention in our audit report, right? So which matters would be like those are having higher assessed risk of material misstatement, or maybe which include significant auditor judgments that have effect on the audit, right, of significant events or transactions that can be mentioned in our key audit matters. Next, we have the emphasis of matter paragraphs. As per ISA 706, if the auditor considers it necessary to draw the user's attention or to a matter presented or disclosed in the financial statements that is fundamental to users' understanding, right? Then the auditor shall include an emphasis of matter paragraph in the auditor's report. For example, there may be a exceptional litigation, right? Or there may be a significant subsequent event that may occur during the date of financial statements or the date of audit report, right? There may be early application of new accounting standards that has material effect on the financial statements, right? Such type of matters can be emphasized with the emphasis of matter paragraphs. There is a other matter paragraphs, which means that the other matters other than those that are presented or disclosed in the financial statements, right, in the auditor's judgment is relevant to users' understanding of the audit. Auditor shall include an other matter paragraph in the auditor's report, provided it is not prohibited by law or any regulation. It should not be a key audit matter because we have already dealt in our key audit matters. For example, like if entity is reporting on more than one set of financial statements, or there may be a prior period financial statements audited by predecessor auditor, or there may be further explanation of the auditor's responsibilities that should be included in other matter paragraphs, right? Lastly, the things which we have noticed, which we have findings, right, that can be communicated to management, TCWG, those charged with governance. First, the auditor's responsibilities, what he has done, what he performed, and he can mention that the responsibilities in relation to the financial statement, how he planned, scope, timing, the significant findings, as well as any issues during the audit, or maybe the independence issues affecting the audit that can be communicated to TCWG. Alright, and the last, for which we did a lot of efforts like planning, performing, completion. Now we are at the last stage, that is issuing our auditor's report. So what we have in this, like we will have the title, addressee, opinion, basis of opinion, like we discussed, how we form our opinion, like qualified, adverse, unmodified. We mentioned the key audit matters paragraph, other information, responsibilities of management, TCWG for the financial statements, auditor's responsibility for the audit of financial statement, report on other legal or regulatory requirements, engagement partner's name, then signatures and date, right? So guys, we covered the audit and assurance revision in around half an hour. So you can revise it before your exam day, or maybe on the exam day. It would be definitely help you to achieve good marks. Thank you. Bye. Take care.